The reason I'm so passionate about Bitcoin, the reason I talk about it every day, is because I believe there's a massive problem in the world. The money's broken. I view the fix to this problem as a matter of engineering, and Bitcoin is an engineering solution to this massive problem. This is the biggest idea of our time.
Dylan, tell me about your story, because you don't have a college degree, which most people would be shocked at. Tell me how you got here.
I started studying economics. I went to college for a year in 2019. Long story short, I kind of stumbled down the Bitcoin rabbit hole, but it didn't fully click. Then they print $10 trillion in COVID, and it was this oh crap moment of like, I'm fully orange pilled. I need to acquire as much Bitcoin as I can. It was a leap of faith, but deeply convicted in the trajectory of everything.
How are you feeling right now about the market, about the future?
We live in a world where everything you ever want, ever desire in this world is going to become more expensive. The root cause of a lot of this is the fact that 90% of the world is on a treadmill. Just imagine if we had a world where money wasn't in the hands of governments. What's better? A bunch of old white men in a boardroom making decisions about the world money, or computers and math?
You don't create Bitcoin, you discover it. And I would just encourage anybody who this isn't making sense to just listen to more hours of people like Dylan, people that have really gone deep about it, talk about it, and it will start to sink in.
If you're thinking about having a family one day, if you're thinking about saving for a future, if you want to buy a home, you need Bitcoin. You need something that's not going to steal from you. You can go really deep into this, and you can look at the analytics side like I do, and some people really get into the financial derivatives. Just buy a little bit every day or every week. Doesn't have to be a lot. You don't have to go all in, but you should really have some, because this is a building block for your future that's not going to steal from you.
The world is changing. Inspiration is everywhere. It has never been so easy to connect, share, and bring people together. We're learning from others and finding the best in ourselves. Challenging our beliefs, sharing our vulnerability, overcoming our fears, transforming ourselves so we can transform the world. How far can we go?
This is London Real. I am Brian Rose. My guest today is...
This is London Real. I am Brian Rose. My guest today is Dylan LeClair, the market analyst, writer, and Bitcoin maximalist. You are the director of market intelligence at UTXO Management and the co-founder of 21st Paradigm, a consulting firm with the goal of helping individuals and businesses understand and utilize Bitcoin. You have become one of the leading macro analysts in the industry, with your research and perspective featured on Fox Business and CNBC. You are passionate about human freedom and economic empowerment in the digital age, and you have said our current financial system is broken, with traditional fiat currencies succumbing to inflation, manipulation, and centralized control. Your goal is to educate the world about Bitcoin's potential as a peaceful solution to the corruption plaguing traditional financial systems. You believe it is the pinnacle of monetary innovation, offering humanity its best chance at a fair and transparent financial future. Dylan, welcome to London Real.
Wow, what an intro. Thanks for having me. I'm really excited for this.
Dude, I'm super pumped to have you. I've been watching you for years and really admire, the way that you speak about Bitcoin. And, someone was asking me recently about you, and I said, the reason I think people resonate with you, Dylan, is because you're so congruent with what you say, and people can feel that energy, that you truly believe this to your core. And when we learn more about your life journey, your actions really reflect that belief. And so I can't wait to get into your story and your thoughts on the market, but maybe we start with where we are today. I mean, oh my gosh, every day I wake up and I see Bitcoin, with a 70,000 handle on it. I just keep thinking, wow, is this a dreamland? Is this real? This is what we all thought would happen and maybe hoped would happen, but we're coming off of a 2-year winter bear market where it went as low as 16, and there was a lot of pain, or there were a lot of naysayers out there. How are you feeling right now about the market, about the future, about everything?
Yeah, no, I mean, in regards to Bitcoin, pretty unfazed. This is kind of par for the course with Bitcoin. I think a lot of people get caught up in unit bias, like, oh, it's 70,000, or oh, it's 2 times more expensive than it was a few months ago, and it always Bitcoin always feels pricey. It felt pricey. Yeah, most people, if you talk to them, whether they started buying in 2013 or 3 months ago or anywhere in between, they'll tell you, well, it felt really expensive when the person that kind of got me into it was buying it 10 times, like 90% cheaper, right? So I think it's important to kind of understand this trajectory, right? Like this is not like something that's going to go away in the wind. This is a shift in what we value and how we value money in the digital age, right? Because we live in a world, and I'll often talk about the dollar, and I'll talk about the state of the U.S. financial system, and really that's kind of a proxy for the global economic system, the global financial system. But we live in a world where you are going to, everything you ever want, ever desire in this world is going to become more expensive in political currency terms forever. That's just a fact. That's not. People often make this bipartisan. They'll tell you Trump or Biden did this, and this misses really what's actually happening. This is not bipartisan. This is not red team or blue team. This is not just U.S. or Europe. This is everywhere. It's every developed nation, and every developing nation has this problem. And oftentimes it leads to strife with the populace and class warfare and ethnic conflicts and there's a lot going on here, but the root cause of a lot of this is the fact that 90% of the world is on a treadmill, and that treadmill is actually accelerating. And so there needs to be a solution here, and the solution isn't political, because if you just look at the math, you look at just the debt burdens globally. We're more indebted, not just in nominal number terms and nominal fiat currency terms. Like people will throw out, we're 30 trillion in debt, right? Well, the debt number doesn't matter in isolation. The debt number relative to our productivity is what matters. And relative to our productivity, the developed world has never been more indebted. So there's no way to pay this down without a sustained period of inflation, with waves of inflation. That means we're going to be in a world where your savings interest rate, or just the interest rates themselves, are going to be far lower than inflation rates for long periods of time. That's the only way out of where we are. And so in that world, right, anybody that saves money in dollars or euros or yen or yuan or pesos, or anybody that lends money, creditors, right? Anybody that's a bondholder or saving money in a CD is going to get pillaged. So I view Bitcoin, the fluctuations, the volatility, right? Like rode Bitcoin from 3,000 to 70,000 to 15,000 back to 70,000 and bought through it all, right? And you need to have some deep conviction to do that, but ultimately the fiat exchange rate on a day-to-day basis is irrelevant to me. Right, because it's clear where we're going, and where we're going is a world where essentially the theft, right? The people think of taxation as kind of how politicians will take the money. Really, the more insidious thing that's not explicit but implicit is the inflation. And most of the Western world hasn't lived through inflationary regimes. We've had a couple of years of it, and the policymakers are saying it's transitory. And they'll say, they'll often say, well, inflation's coming down. Right. Inflation was at 9%. Now it's at 3%. But the actual price level hasn't gone down at all. The average price level is continuing to increase. It's only the rate of change of the inflation that's decelerated. So this is a big problem, right? And the reason I'm so passionate about Bitcoin, the reason I talk about it every day, the reason I've bet my personal life, my social life, my professional life, and financially on this thing is because I believe there's a massive problem in the world, the biggest problem in the world, and it's that the money's broken. And so you can think what you will about that, but I would say that's a reality. And so with that, I've searched far and wide for solutions to this problem: political solutions, technological solutions, economic solutions, and really, I view the fix to this problem as a matter of engineering, and Bitcoin is an engineering solution to this massive problem, in my view. a fixed apolitical currency, absolutely scarce, that no one person can manipulate. This is the biggest idea of our time. And people get fooled with the volatility and the trading, and they think that this is just kind of this wild speculation that has nothing backing it. And that couldn't be further from the truth. So, I've dedicated a lot of my time to go around and explain what I deeply believe, not to the benefit of myself, because again, this is $1.5 trillion, right? Me getting someone to put $1,000 in, or 10,000, or even $1 million, or even $1 billion, right? Like, this doesn't materially affect where this is all going. So this is bigger than me. I'm irrelevant to the rise in monetization of Bitcoin. And it's really kind of, you can't isolate yourself. You can't insulate yourself from this thing. This is just an economic reality. So I like to try to articulate what I see is happening, and also, to try to help people, because this is an ongoing problem and it's not going away. So this needs to be addressed.
I like that statement you opened up with, which says that maybe the first time you buy Bitcoin, it always feels a little expensive. And I was having flashbacks when I first bought my first Bitcoin in 2013. And, the quote unquote mid market at this thing that wasn't really an exchange said it was like $85 and I had to pay $100. And it did feel a little expensive. And then maybe later when I paid $35,000, it felt a little expensive. And maybe that's actually a good thing for people listening to this that don't own any, to know that it's natural for it to feel a little expensive the first time you do it, because maybe you've never owned a digital asset before. Maybe you've never owned something like this. Just like the first time you go for a mile run, it might be, you might breathe hard, but it's okay. Maybe you're heading in the right direction. I also just thought of something that Bruce Fenton said, and other people have said. He runs the Satoshi Roundtable, where we met in Dubai, and I just saw him in Paris at the Paris Blockchain Summit. And he says, in Bitcoin, everybody gets in at the price they deserve. And I'm wondering if you agree with that statement. And then also, what does that statement mean?
Yeah, well, it sounds a little harsh almost, but it is ultimately true. This thing was Bitcoin. It's open source software, right? The creator of it is pseudonymous, never took any coins for himself or herself or them, right? Who knows who Satoshi is? I think it's irrelevant at this point. But right, this Bitcoin exchanged hands and proliferated around the world for almost 2 years with zero or near zero market value, right? So it's fundamentally different from a cryptocurrency that launched yesterday that was had $100 million of venture capital investment, and technologists and exchanges that pre-listed it and got an allocation, right? Like, Bitcoin distributed for a couple of years with no market value, and even in the first 3-4 years of it, the total value of all Bitcoin was less than $1 billion, right? It was irrelevant. I mean, even at $1 trillion in the pool of global wealth, it's largely still not irrelevant, but very, very small in this kind of global pool of liquidity. So it's been proliferating around the world and distributing for 15 years. And through that process, it's gone exponential and appreciated by orders of magnitude, and crashed 70-80% 4 separate times. So you get Bitcoin at the price you deserve. Well, there's been a lot of people that have had multiple, if not, probably 10, 50 touch points with Bitcoin that have ignored it. Or, you first hear about Bitcoin at $100, you dismiss it. It's now 20,000. It's now 70,000. You can't possibly bring yourself to buy some now when you think back to your previous mistake. But ultimately, I think that sunk cost fallacy is a really poor way to think about this, because I'll frame it as such. Like, what if there was a new digital, apolitical form of money that arose from scratch, from zero, right? That wasn't owned by a government, that wasn't owned by a corporation, that wasn't owned by, a hotshot tech CEO, right? Like, this isn't like Elon Musk creating his own money. This is open source software. No one owns it. No one controls it. No one can stop the next block from being mined. So if this, never mind Bitcoin, forget Bitcoin. Just imagine if we had a world where money wasn't in the hands of governments and wasn't devaluing in perpetuity forever. What would it look like? What would it look like starting from zero to go to world money? Or maybe not even world money, but a world money, right? It doesn't have to take everything. But what if it's just a global savings account? What would that look like? And for me, I really think it would look something like a lot like Bitcoin, where You have massive speculation. You have waves of adopters. The first adopters were cypherpunk types, cryptographers, computer nerds mining in their basement. The second wave was people that wanted digital cash that they thought was anonymous to buy drugs and do stuff on the Silk Road, right? And both those times it crashed 80% shortly after. The 2017 wave was tech-minded people and some speculators, right? And the kind of Silicon Valley types, and it crashed 80%. And this recent wave in 2020 was, people beginning to understand the macro picture of, oh my God, they just printed $10 trillion, right? They're printing $100 billion a month and rates are at zero and inflation's accelerating. I should get some Bitcoin, right? And we crash 70%. And Sam Bankman-Fried goes to jail, and a whole bunch of fraud wipes out, and hedge funds blow up, and 3 exchanges blow up, and market makers go under, and lenders go under, and we crash 70%, right? And here we are at, maybe not at all-time highs, but at 70,000, the high is 73, right? So we're flirting with all-time highs. The bond market is melting, right? And rates are at 5.5%. So a lot of people said, well, this thing is just a zero interest rate phenomenon. It's just a speculative thing. It's going away. Powell hikes rates. We told you it crashed. Well, rates are 5.5%, and they're talking about cuts this year, and Bitcoin's at all-time highs. So this is obviously not just a zero interest rate phenomenon. This is obviously not just going away, and it's proven a lot of mental models wrong. So you get Bitcoin at the price you deserve sounds very harsh, and it sounds like we're kind of excluding people, but no, this is an open network, right? Like a lot of people, a lot of Bitcoiners, the anarchist types, they're not a big fan of BlackRock, right? They're not a big fan of Wall Street, but it's a permissionless system. So BlackRock says, hey, we're filing an ETF, we're coming in, and we're going to buy 250,000 coins in 3 months, right? We're going to buy more than 1% of the supply of Bitcoin in 3 months because we're hungry for this thing. Our clients are smashing down our doors demanding this thing. And I can't stop it. No Bitcoin proponent can stop it because it's an open permissionless system. So you get Bitcoin at the price you deserve, right? Is more so saying, well, the past is the past. Future is the future. You can continue to ignore this thing and pretend that it doesn't exist, but that doesn't actually change or alter the reality of this. It would be wise for people that have, ignored this, or maybe we got burned on crypto coins or, bought high and sold low, to really understand that this thing is actually a savings vehicle for the long term. And the volatility should, you can maybe just ignore it, but also you should think of this as your friend, right? The volatility of this is so much so that, if you bought the $69,000 high in 2021, when Bitcoin was $30,000 last year in 23, right? It was still 50, 60% from its highs. The people that bought just every single day, $10, $100, $1, doesn't matter, just bought in increments from the highs all the way to the lows, were up. They were up like 50% in dollar terms, despite the exchange rate being 50% down from those highs, right? So the volatility is not your enemy. The volatility is your friend, right? Because if this thing didn't move at all, if this thing, traded like bonds or gold, right? The upside and like the gains and the appreciation of the monetization of this, the monetization path of this, it wouldn't be as lucrative. And a lot of people say, well, it's gone up literally 1 billion %. How much more can this go on? This is ridiculous. This is irrational. And to go back to the first point, it's, well, no, this market, right? Like people talk about total addressable markets, TAM, right? When a VC or a startup says, well, here's our idea. This is the TAM. This is the total addressable market for, DoorDash delivery or whatever it is, right? Here's our idea. Well, the total addressable market for money is the biggest in the world. So if that's broken, right? If the cost of capital, if the money is centrally planned, centrally coordinated, and fundamentally broken, right? Meaning you're getting stolen from forever, right? Like the price of housing, the price of literally everything you want becoming more expensive forever isn't because that there's, less and less houses every year. It's not because there's, cars are becoming much more scarce and your deli sandwich is becoming more and more rare every year. It's because there's more money supply. It's basic supply and demand. So with Bitcoin, right, this is continuing on. $1 trillion for all the Bitcoin in the world is cheap, right? Like And so you get Bitcoin at the price you deserve. Again, it sounds a little harsh, but I think it's a reality of this system is going to continue on. And likely, in my view, right, it's going to continue to appreciate in, boom and bust phases. And, it's going to appreciate by an order of magnitude, and it's going to crash 50, 60%. And laughably, people are going to say, well, we knew it. Bitcoin's dead, right? And we're going to do it again. So that's kind of what I think about that statement.
You mentioned BlackRock. How do you feel about the ETFs? And what do you think the implications are? Obviously, they got announced in January and had a massive uptake. And like you said, they bought 1% of the supply. And, obviously the initial culture was a bit like us against them. Michael Saylor was in Madeira and gave that great speech at the conference where he said, these people aren't our enemies. He said, there are two types of people in the world, those that understand Bitcoin and those that don't yet understand Bitcoin. And he said, it's all of our job to do that, which I guess is kind of how you live. But how do you feel about this ETF? What do you think the implications are going forward?
Yeah. So, how I view it is, it's inevitable. I thought that before the ETFs, that Wall Street and, the Wall Street obviously is going to have interest in this. Of course they are. Everybody's going to have interest in this. But how I think of it kind of like a mental model is, there's $500 trillion or, some amount of a gross amount of wealth in this world. You can call it 300 trillion, 500 trillion. Some people say a quadrillion, which I think is too much, but right, there's hundreds of trillions of dollars of assets. But if you think about how the balance sheet works, one person's assets, another person's liability. So, all of this wealth in the world, there's an equal amount of fiat liabilities. Like there's $300 trillion of debt, fiat liabilities in the world. So Bitcoin is just this little blip on the global asset side of the balance sheet, right? It's just this little tiny, tiny blip. And some people, maybe like myself or some, early Bitcoin people have a disproportionate amount of their wealth, 100% or 90% of their wealth. Some people even have, if you have any liabilities, if you have any debt that you owe, might have more than 100% of their net worth in Bitcoin, right? But that's obviously not the average person or the average, on average, it's less than 1%, right? So maybe like 30 basis points, 0.3% of global wealth, their average wealth is on that Bitcoin on the asset side of the balance sheet. So when you have a world, right, if we think about the fundamental rules and reality of the fiat system, of the dollar system, the system we live in today, right? Or, the analogy of fish swimming through water and someone goes, what's water, right? Like that's kind of that's the system we're in. The rules of that system mean that the perpetual credit expansion, forever increase of the money supply, is a fundamental requirement of the system. So let me, for instance, right? I don't think a lot of people don't understand that when money supply is created through lending in the system. So if we just have a simple example, if there's $100 of global money supply and the bank lends out money, that creates money supply. So if they lend out that $100 at, say 5% interest, well, then someone else now has $100 of cash, they owe $105 in the future, and the bank has a $105 asset on their balance sheet. So that increased the money supply through lending. But if you think about it, because that loan has interest, right? The person has $100 in their hand, but they owe 105. So there's not enough money to cover the debt, right? And that's just one example, right? A very, very simplistic example. But that at a much larger scale is how the system works, right? So money supply is created through lending and it's destroyed through default or repayment of the debt, right? So if you paid off all the debt in the world, which wouldn't be possible, there's not enough money to do it, there would be no money in the system. There'd be no cash, no dollars, no euros, no yen left if all of the debt was paid, right? That would destroy the money supply. So there needs to be more and more and more money, credit expansion forever, right? That's a rule of the system. That's just a rule. That's why you see inflation, is because like deflation in this system for central bankers, for the Treasury, for the US government, for all of the governments of the world, deflation is the enemy. It's almost like this. It's like saying like Voldemort, right? It's like, oh, deflation, don't say that. We can't have that. So what you have in that scenario is a world where the fiat liabilities are forever expanding, right? Along with the assets. The assets in dollar terms or euro terms are constantly expanding. So Bitcoin is just this little blip, and all it's doing it's just nestling itself on the asset side of the global balance sheet. And it started with individuals and, small businesses. And now we're seeing some, public corporations like MicroStrategy and some kind of more, some people that are maybe a little bit more, ahead of the game starting to put this on their balance sheet, right? The ETFs come in. BlackRock has $10 trillion of wealth under management, right? They are directly plugged into the heart of Wall Street, right? The plumbing directly to the heart of Wall Street. BlackRock's plugged in there. So when they come in and say, hey, we're offering a Bitcoin ETF and they're promoting it like crazy, a lot of people will say, well, this is bad. And for me, I say, well, guys, like this is one, inevitable, but two, what kind of Trojan horse our way into the heart of the financial system. So now we're plugged directly in, not directly into the money spigot, but Bitcoin is very close to the heart of the money spigot now. And that's not a bad thing. That is Bitcoin maturing as an asset, right? Because if Bitcoin is to become global money, it needs to become a massive, massive part of the asset side of the global balance sheet, right? Especially swimming in the pool of hundreds of trillions of dollars of debt that's forever increasing. So I view it as, right, like I tell people buy Bitcoin, hold it in self-custody. ETFs are great for a tax advantaged account, or if you have a retirement account or whatever it looks like. But most people, I think the sovereignty is the really, really awesome part of Bitcoin. But are the ETFs a bad thing? No, of course not. I mean, this is one, always an inevitability, and two, right, we're plugged to the heart of Wall Street with trillions of dollars of wealth. So I think it's, that's how I think of it. I was honestly blown away with the pace of initial buying and inflows, right? Like I had to game out last year. So I was tasked with kind of giving a range of estimates of how much I expected the ETF inflows to be. And I forget the exact numbers I put out as we were kind of, just saying like best case scenario, worst case scenario. And I think this shattered my on year one, my best case on just like the pace of the inflows, no outflows through IBIT. The most successful ETF launch in history. That grabs eyeballs, right? So Bitcoin's a huge story, and more people realize, well, nope, it didn't die with Sam Bankman-Fried or the crash of 22. This isn't just a zero interest rate phenomenon. A lot of people's mental models of the thing have been completely disproven. So when you can't kill this thing, it continues to just chug along block by block by block, and the fundamentals keep improving. You have to go from a 0% position to a 1% position, or else you're taking risk, right? It's risky to have a non-zero Bitcoin exposure, especially if you're in, a competitive field like Wall Street, right? Where your competitor bought Bitcoin when the ETF launched, they're up 100%. You didn't buy any when BlackRock, the biggest institution in the world, is promoting this. So I think that's where I've been blown away. I didn't expect all-time highs before the halving, but certainly welcomed a welcomed moment.
Yeah, it was pretty impressive because I had a slow start and then it all just came cranking in. You mentioned the halving. Let's talk about that, and then I got a couple other questions. But that's something that happens every 4 years. Obviously, there's been a pattern of behavior in the past where the all-time high happens after the halving or the halving. This time it happened before. You could say maybe it was because of this once-in-a-lifetime event of the ETF. How do you feel about the halving? Is it still relevant? Will it be relevant in the future? And some people say, well, isn't that already priced in because we know it's going to happen? What is your read on it?
Yeah, well, it's been interesting because the previous three halvings, Bitcoin's gone parabolic, in the 12 months that's followed. So it's this kind of debate internally in the Bitcoin community, like cause effect. Is this just spurious? Is it just by chance? I think in the early days, the halving was extremely significant. Just, for instance, 50 Bitcoin of issuance, right? Like I like to think of Bitcoin as having 21 million in circulation already, and they're just being unlocked rather than new supply being issued, right? Like think of Bitcoin, the terminal inflation rate of Bitcoin is 0, right? These coins are just being unlocked, right? Or even they're just being purchased by the miners with electricity and computing power. So I think that's kind of a good framing rather than being like, oh yeah, they're inflating new supply. But in the early days, right, when 50 Bitcoin was being issued every 10 minutes and you changed to 25 Bitcoin every 10 minutes, as a percent of the supply, that was very significant. And then, the next halving was 25 BTC to 12.5, 12 and a half. And in 2020, it went from 12 and a half to six and an eighth, to six and a fourth rather, 6.25. And now we're going from 900 Bitcoin a day to 450 Bitcoin a day, or three and an eighth per block every 10 minutes. I think it's significant, and I've explained this a bit before, and this is maybe contrarian, but I think a lot of people say like this is a real supply event. This is a supply shortage, a supply shock coming to the market. And this time around, I view it almost as a demand event. And what I mean by that is the Bitcoin system, the Bitcoin protocol was, for the most part, and there's been tweaks and some bug fixes and improvements to the base layer on the edges, on the fringes for the last 15 years. But the core protocol was basically set in stone once Satoshi launched the first version, right? V1. The essence of Bitcoin, the supply cap, the halvings, how mining works, this was from release one has been basically unchanged. Right, Bitcoin's ticking on regardless of what I think, regardless of what I say or anyone else thinks or says, right? There's no one on the planet, literally no one, not the US government, not Russia, not the richest man in the world, that can stop the next block from being mined. So it's a really powerful statement when, in the face of FOMC meetings and central bank policy decisions, and we're going to cut rates, or we're going to pause, or we're going to raise rates, or the inflation print just came a little hot, stocks and bonds crash or go up, and right, there's this kind of like this global financial system is just like a dance with how much can we game the Fed, right? Like how much how much can we really push this thing? How much can we push up markets and get away with it? It's like, and people are reading Fed tea leaves, and there's a real, like, the financial markets these days, especially like equities, aren't really about valuing fundamental businesses. It's more about, okay, well, are they going to be expanding the money supply, or are they going to be, kind of tightening the belt a little bit, right? Like stocks and assets aren't moving because of their valuations or their business prospects on a day-to-day or month-to-month basis. They're just moving with liquidity, right? So it's become kind of a game of like central bank tea leaves, and this is a global thing, right? Especially after the great financial crisis, when they just said we're going to stimulate for a decade, right? And COVID was kind of just this like steroid to a normal, a dead patient or a near dead patient. And so when there's this Bitcoin thing that's been ticking on for 15 years, it's crashed, it's appreciated, it's this this intangible thing that no one can see or touch, so they don't understand it. And it's saying, well, in the face of all of this economic chaos, in the face of, Fed speak and Jerome Powell saying, we're going to cut rates 6 times, to we're going to cut rates 3 times, to maybe we don't cut rates, inflation's reaccelerating. And Bitcoin goes, we don't care. Like it's the supply issuance is getting cut in half in a week, and technically like 1,000 blocks or so. But block 840,000 supply issuance is getting cut in half. I view this as just a global advertisement for what a lot of people, real, Bitcoin proponents, and people that have studied this deeply already know, right? But most people don't understand what's happening. So is this a massive driver on the supply side? Well, when I look at a lot of data, like I look at, Bitcoin supply is completely transparent. I can see all Bitcoin in circulation. I can see when they moved last. It's an open ledger of property, of ownership. You see, tens of thousands of Bitcoin changing hands every day, right? Some of them go to exchanges. Some of those are just people moving wallets, right? But thousands and thousands of Bitcoin are changing hands and getting sold and bought and held for years every single day. And so I don't think the most significant thing is, especially when, BlackRock is putting hundreds of millions of dollars in on a daily basis, or, ETFs in general are buying and selling billions. I don't think like from 900 BTC a day to 450 BTC a day for the miners is the biggest shift in the world, right? Like back of napkin math, like $60 million a day of issuance to like 30 million and change. It's not the biggest deal, but what is a big deal is the power of this, the reality of this protocol that is apolitical, right? It's programmatic, it's quantitative, right? this is like a quantitative tightening, right? Imagine if the Fed's monetary policy was known for the next 100 years, right? And like, obviously that's not how it is. This is a political, kind of jawboning sort of thing. And we kind of know this is just our reality, right? The entire global financial system, once every couple months, we get up and we watch an old man speak, and we kind of have to parse his words and his tone to think if he's going to print more money or not. That's literally what Wall Street does, right? And the big Bitcoin people say, well, yeah, I mean, my monetary policy is unchanged until 4 years from now. But we know this, right? We know 21 million Bitcoin are going to be issued by 2140. We know that 99% of the Bitcoin are going to be in circulation in the next 10 years, right? So, and the inflation rate or the issuance rate is getting cut in half in about a week. So, and I think this was a really, really interesting or stark kind of comparison in 2020, right? This May 11th, 2020 was the last halving. And that was basically the same exact time that the Fed was saying there's unlimited money at the Federal Reserve. We have unlimited bank reserves. We'll buy as many bonds as possible, and interest rates are zero. And meanwhile, Bitcoin, as money printers go and burr, says, yeah, we're actually going to tighten the belt. We're going to quantitative hardening. So I think when I say it's a demand event, I think a lot of people have heard of Bitcoin. I would say 99% of adults have heard the term Bitcoin before. They know it's some internet money thing. But I think probably, a small percentage of the world could, if you ask them, intimately explain the mechanics of the Bitcoin halving, intimately explain how 21 million Bitcoin supply cap is enforced, how mining works, how proof of work works, what's the difficulty adjustment. And if you don't know those things, that's totally fine. But this halving event, this thing that we knew was coming in advance, is kind of just this global advertisement of, hey, we have a better money. It's just a superior system. It's an engineering feat. It's an engineering marvel. This is not political. Right. And if you think of strip everything you know away, right? Everything you've been taught about economics, everything you've been taught about the world, of governments, what's better, right? A bunch of old white men in a boardroom making decisions about the world money, or computers and math. This is just math, right? So I think that's the real reason why the halving is so bullish in my view. It's because people all over the world are saying, what's happening again? Oh, this is money that's programmatic. It's digital. No one's stealing from me. So I think it's a demand event. I think a lot of people are going to have to come to, do some digging and say, wow, this thing just keeps chugging on. So that's why I love the halving so much.
So then is Bitcoin going to go parabolic?
Yeah, I mean, I'm pretty bullish for this year. I mean, in general, and again, past performance is not indicative of future results, but in the past, when Bitcoin kind of breaks multi-year highs, it gets really, really bonkers, in the next few months or next year. And so, yeah, like I said, I was surprised that a new all-time high was made pre-halving, kind of broke a lot of people's models of how a Bitcoin cycle is supposed to be. But I mean, we're in a really interesting spot right now, right? Gold's hitting all-time highs, bonds are falling, commodities are reaccelerating, oil's hitting highs, a bunch of kind of smaller commodities like cocoa and like our coffee are hitting highs. So this inflation problem that the central banks thought they kind of won, right? There was kind of a premature celebration of, well, we're in this fight against inflation, right? And they kind of all came out and celebrated at the end of 23 and said, well, basically we got this under control. We're headed back to 2% inflation, which if you think of it, right, why does inflation need to be 2% a year? I mean, that's a different conversation, but right, if this is just kind of economic orthodoxy, well, this is what we need. And no one can give you a good explanation for why, right? And it's just because they need perpetual money expansion. So they say that, well, that 2% number is the right one. And it is right because 2% is just stealthy enough where you can't really notice, right? Well, things only get a little more expensive every year. But when that 2% is compounding at 5 or 6%, you really, really notice. So, here we are, right? Inflation's reaccelerating. Rates are at 5.5%. And that's not crazy, right? Interest rates were 10, 20% in the 80s, right? And 90s. Why is that such a big deal? Well, it's such a big deal because our debt burdens relative to our productivity have never been higher, right? So we're paying more. The US is paying more on interest expense than it is on defense and military budget, right? So this is like someone, this is like a kind of a rogue teenager that has a credit card that just, doesn't know the first thing about finance and is racking up a tab. And to pay those credit cards off, they opened up a new credit card, right? That's the state of the US fiscal position. So either the Fed has to cut rates, right? And they goose this rogue system that has stocks at all-time highs, Bitcoin at all-time highs, gold at all-time highs, commodities ripping, oil ripping, or they raise interest rates and we fast track to bankrupt a bunch of sovereign nations, the US included, right? This is like a slow motion bankruptcy. And they're not going to, actually go bankrupt because they have a money printer. But the bankruptcy means, that prices of everything are going exponential because, right, the US has to fund itself. And so that's just going to come in the form of money printing. So I'm really bullish on Bitcoin. I mean, I've learned in the past, I've put out publicly like price targets or certain times, and I've realized, you can give a price target or a time frame, but doing both is kind of a fool's errand, right? Like I'm not I don't really care what Bitcoin does tomorrow or next week or even next month or maybe even next year. But I would be surprised if Bitcoin doesn't, go in 6 figures this year. And who knows? I mean, I've eaten my words before, but I'm generally really, really bullish because nothing is stopping this trend, right? And never mind the dollar story, but the Bitcoin story, just open source software, a technology that has its own adoption curve. And we haven't even talked about the energy side of this, right? The fact that Bitcoin's being powered by all of this waste energy around the world is another thing that no one kind of understands. Like, it's not just intangible. Like, there is actually physical infrastructure, and it's not bad for the climate, bad for the planet. This is using waste energy, right? So you go out to these random oil fields, they're spewing methane into the atmosphere, and sometimes they just flare it. You see there's fire burning into the atmosphere. They're just burning methane, burning natural gas to make it a little bit less bad for the environment. Well, Bitcoin miners come in, they combust all of that terrible methane for the ozone layer. It's like 80 times worse than carbon dioxide. They combust that, they turn it into electricity, and they turn it into digital money. Right. So Bitcoin miners are doing a huge service to the grid and to the environment. And it's interesting because a lot of the kind of the progressives, or not even to make this political, but the climate, the people that are very interested in the kind of the long-term trajectory of our climate are against Bitcoin without realizing that this is a technological innovation. This is like carbon capture technology. And a lot of people think it's the opposite. So that's one, never mind the deficits and the money printing, which is a reality, which isn't going away. But Bitcoin itself, right? The numerator BTC/USD, the USD problem is not going away. Everything's going to become more expensive. Stocks, gold, real estate, forever, food. But the BTC aspect too also has its own adoption curve. And that's never been stronger. And that will continue. So I'm super bullish. I expect higher prices, but should you expect 25% pullbacks, 50% pullbacks? Yeah, of course.
Yeah, welcome to Bitcoin. It's funny you talk about the old men in the room and the tea leaves and stuff. I'm getting flashbacks, Dylan, because I was in Boston for 4 years, was at MIT, and then I went to Wall Street. And so in '93, I got to Wall Street, and I'm this punk ass kid. I got one suit. I'm 22. And I go on this trading floor with these 300 of these crazy alpha females and males, all on basically this fixed income trading floor. And I was trading fixed income derivatives. And they started teaching me about the way the market works. And they're like, well, there's this thing called non-farm payrolls. And every month we all wait on eggshells for it to come. And then we look at the number, and then the markets react. And all these, here's how it works. And it was weird though, because I was a fish in that water. And so I never asked questions. These men and women were making, 100 or 1,000 or 10,000 times than I had made the previous year. And if I went along with this hocus pocus, I would make the same type of money, and I did. And yet no one ever, when I was there, it was kind of pre-internet, ever stood back when we're having drinks out on the town in Manhattan saying, hey guys, did you ever wonder what the Federal Reserve is, or who owns it, or no one ever asked that question. And it's even funnier, Dylan, if I even backtracked back to MIT, I had to take microeconomics and macroeconomics to get my mechanical engineering degree at MIT. And to get my mechanical engineering degree, I also had to take physics and vector calculus and thermodynamics and fluid dynamics. Now, these are serious courses that really describe the natural world, not down to the T, because there's all this weird Newtonian stuff, but Like, this is a way of describing the world that is fairly correct, and you can mimic it in any environment. And I'm telling you, Dylan, when you put me as an engineer in a micro or macroeconomics course where they give you these ISLM curves, you know, we always kind of looked at the professors kind of askance and thought, you know, this is kind of...
To continue watching the rest of the episode for free, visit our website londonreal.tv or click the link in the description below.
So Jim Rickards has just recorded a video that's not available to anyone in the public, and he's going to be talking about how this upcoming recession is going to be fast, it's going to be bloody, it's going to be nasty. But at the same time, he's going to show you how you can position yourself to profit from all of this chaos. Now, we've made this video only available to our viewers. Go to londonreal.tv/Jim. Watch that immediately. I can't say enough good things about Jim Rickards. He understands the global economic system better than any guest I've ever had on London Real. His predictions are almost uncannily true, and you can learn how to profit from his vision, from his expertise, and his understanding of economics. So go to londonreal.tv/Jim or click the link below. It's an excellent, excellent look on what's going to happen in the future and how you can position yourself to profit from that. Jim is one of the best in the business, one of my favorite guests on London Real, and he's very, very good at predicting the future and showing us all to profit from it. So click the link, and I hope you enjoy. Hey, it's Brian Rose, founder of the DeFi Academy. I've told you my 4-week crypto bootcamp is amazing, but don't take my word for it. This is what my students are saying.
The DeFi Academy was an amazing experience for me. It took me totally out of my comfort zone.
In this course, I was challenged, I was held accountable, and pushed to do things that honestly weren't always easy.
It's been phenomenal, and I can't believe we're already up on our 4 weeks. It has flown by.
Going through this DeFi accelerator by far was one of the best courses I've taken.
You do this course, you really get into the nitty-gritty of the activities that will make you comfortable with decentralized finance.
Thank you so much to Brian and everyone at London Real and the DeFi Academy for even putting together an amazing course like this.
Anybody else that wants to do it, please sign up. It is well worth the money.